Hey, hey. Happy it got slightly warmer in Florida. Still a little chilly here, but we're going to get through. Okay, I'm going to bring it back into some crypto. I know my crypto folks have been a little worried about what's been going on lately. And that's what we're going to talk about. So let's get into it, yeah? Hi, I'm Bet Hochberger, CPA, CGMA, and today we're going to talk about how crypto's taken a hit, but that could be great for your taxes, right? You have to have some upside here. So if you've been following the crypto markets lately, you know it's been a bumpy ride, right? Bitcoin, Ethereum, Solana, they've all taken some pretty steep hits recently. But the silver lining, right? If you've got losses in your crypto portfolio, this could be a good moment for some tax planning and strategy, right? Let's talk about how we turn that dip into potential tax savings. When the market goes down, one of the smartest moves you can make is tax loss harvesting. If you sell crypto that's currently worth less than what you paid for it, you realize a capital loss. And that loss can offset other capital gains you've made. Maybe it's in stocks, other investments, or even other crypto. And here's the unique part. Crypto is not subject to the wash sale rules. That only applies to securities. That means if you sell Bitcoin today and recognize the loss, you can go right back in and buy it the same day, still keep your market position. It's one of those few areas in tax planning where the tax code gives you flexibility, right? I say every once in a while the IRS throws us a bone and there's something that we can take advantage of. So do so while it lasts. Now, of course, record keeping is critical. If you've been around a little while in crypto, you know that tracking can get messy very fast for tax purposes, right? Between exchanges, wallets, DeFi platforms, you need detailed records, cost basis, sales, income from staking and airdrops. So if you've been moving assets around this year, it's time to go organize that data now. Don't come in March and April when you're rushing to get it done. You're going on extension because it's not easy. If you're new to crypto, you might not realize that it's not easy, but trust me, it's not easy to get that organized and put together for tax filing. And remember, the IRS made it clear that they are paying attention to digital assets, right? The new Form 1099-DA, it's expected to start rolling out soon, which means exchanges will be reporting transactions directly to the IRS, similar to how stockbrokers have to put it on the 1099-B forms, right? I actually think it's a good thing. It makes our lives a little easier, but I don't know. That's a different post with a different discussion. This isn't the year, though, to forget, oops, I forgot to put my crypto trades on the tax returns. The IRS, to some extent, is going to know what you've done. So from a planning perspective, now is the time to review your entire investment picture. Look where you have gains, look where you have losses, see if it makes sense to realize some of those losses before December 31st, right? Again, don't wait until tax season and be like, oh, oops, I should have. No, now is the time to make those decisions. And if you're working with a financial advisor, whether or not they're into crypto, you should have a CPA that will help you look at the global perspective. At the end of the day, that's what proactive tax strategy and tax planning is about. It's not just filing forms, it's making the decisions before the year ends that can legally lower your tax bill. So if you need help running those scenarios, figuring out how the crypto fits into your broader tax strategy, or cleaning up your records before the year is over, reach out to us, right? Drop a comment, contact my office, get in touch with us. You still have a little bit of time. You don't have a ton of time, right? But you can get it done. Hopefully I give you some good information here. Hopefully you're thinking about loss harvesting as a tax advantage and not just crying about your portfolio. But yeah, that's what we're here for. So we'll see you next time.